If you plan on investing for a long time period, I would recommend just owning Bitcoin. But I think these four preferred stocks, STRK, STRD, STRC, and STRF, are very compelling if you are looking for cash flow. So I want to break down why I think these are so impactful, explain a little bit of the differences between the four and which one might be right for you. So let's get right into it. I'm very bullish on strategy as a company, and I made the mistake when I first started learning about it. I just went too far into the common equity and trying to build leverage, as I thought the price would go high in a shorter amount of time. But I should have stuck to my conviction on my long-term thesis about strategy, which is that I believe it will be one of, if not the largest company in the world. I believe it'll be a multi-trillion-dollar company just sheerly based on how much Bitcoin they own. And if you read the news or anything about strategy, you'd think it's like this crazy leveraged company. They're going all in on Bitcoin. There's all this risk. But if you actually look at the capital structure of the company, it's a very financially stable and delevered company. So their capital structure here, their enterprise value is $98 billion with a market cap of $83 billion, and they have $71 billion worth of Bitcoin. Their convertible debt is only $8.2 billion, so they're only leveraged at a 1.1x leverage ratio, which if you compare that to a lot of fiat companies, this is one of the safest companies out there. Their preferred equity represents $6.6 billion, and this is the annual dividend interest. I think this is one of the most important things and why I think these products are so powerful, right? Their annual dividend interest is $689 million. So at the current value of their Bitcoin, they have 100 plus years of dividends to pay out to these preferred stocks. And I think that's the most important aspect in understanding why these are so powerful and safe relative to other debt instruments out there. This is a chart comparing the performance of these equities to other types of credit, private credit, junk bonds, bank preferreds, investment grade bonds, mortgage-backed, money markets, treasury bills, etc. And you can see these have different dividend rates. We'll kind of go into the differences right after this. This is the company's capital stack. It basically shows which takes priority if there were some type of liquidation event. So STRF is the most senior, so this would take priority over any of these other equities. And then it goes STRC, STRK, STRD, their Bitcoin, and then their common stock, which there's $120 billion worth of. That's what makes these so safe of an investment, right? Because the common stock is at the bottom. So if there were some type of liquidation event and the common stock were to go to $5, whatever, if the common stock were to drop heavily, then these would still be safe in the company's capital stack. Let's explain the difference briefly of each of these. So let's start with Strike or STRK. STRK has an 8% dividend coupon plus equity exposure through MSTR conversion rate. So STRK, it has a little bit more of the upside. As we can see, it's slightly lower on the capital stack. So you have a component, right? So 33% is convertible into MSTR shares. So you have a little bit more of that volatility as opposed to something like STRC. With STRC, you have the volatility basically stripped out of the instrument completely. With STRC, you get that 8% dividend coupon plus the potential upside of the equity. So let's explain this effective yield number. So the effective yield, 9.1%. So when they say 8% dividend coupon, that's on a par value of $100. The effective yield, they're saying since the price currently is slightly below $100, then you get technically a higher effective yield by buying shares now, right? You still get the 8% dividend on the $100 share price. That doesn't change. So even if the STRK share were to go to $50, you would still get the basically $8 coupon on that. So then they have this adjusted yield here as well. I think that's just factoring in the performance of the common stock and then Bitcoin rating of 5.2, meaning STRK is roughly 5.2 times over collateralized by the Bitcoin that the company holds. I think that's the important thing to hear, right? If you didn't understand what strategy is doing, you'd think it's so risky. All they're doing is betting on Bitcoin, but they have Bitcoin, the Bitcoin rating basically showing that for each dollar of STRK equity that they issue out, they have $5.20 of Bitcoin backing it, right, on the company's balance sheet. So that helps you rest assured that your investment is safe. In short, STRK is higher yield, more upside, and longer duration than alternative investments. Now let's move to STRD. STRD is high yield credit. It trades almost like a quote unquote junk bond. When you look at junk bonds in traditional finance, they're typically bonds with a little more risk or something like that, so they have a higher yield payment. Although I'd argue Stride is much safer than most corporate bonds you could buy out there. So let's break it down why. So STRD is the lowest of the preferred stocks on the company's balance sheet, but I still think it's interesting because it's still above the common stock at the end of the day, which is important. So it's a 10% cash dividend coupon. So at the current price, as of the quarter 3 earnings call just a few weeks ago, the effective yield on the current share price is 12.5%. So it's really treated like a junk bond, right? These yields are really high. So they also have a tax equivalent yield, which is another important factor because it's taking into account the fact that the dividends paid by these instruments are tax deferred, meaning for this, they're also taking into account the percentage benefit you would gain from using these types of credit instruments and the tax benefits that they provide over other types of debt instruments. They have STRD as a Bitcoin rating of 4.8x, which is pretty close to STRK, and it's a 8-year duration. STRD offers the highest effective yield for those wishing to maximize cash flows, higher yield, more collateral, and longer duration than junk bonds. So here they're just comparing the yield of STRD to other instruments, and yeah, I still think STRD is interesting. And again, if I were to do it all over again, I wish I wouldn't have tried to go so hard trying to bet that MSTR, the common stock, was going up. I honestly wish I had just built a portfolio. Even if I just did equal parts, right? I would have done equal parts MSTR, STRK, STRD, STRF. I would have performed a lot better. If I were to do it over again, I think that's what I would do today. But again, it's important to emphasize that I think if you're investing, saving for the long term, you should buy Bitcoin. But if you're someone who wants a cash flow for retirement, something like that, these are a great place to look. So next, let's look at STRF. Again, like we discussed before, STRF is at the top of the capital stack. It's the crown jewel of Strategy's preferred instruments. Again, it's a 10% cash dividend coupon with enhanced payment protection features. So this has the biggest, the highest Bitcoin rating. STRF is 7.5 times over collateralized by Bitcoin. That is just absolutely huge and unheard of in terms of corporate debt. The effective yield is 9.1% at the current price. So like I said earlier, since the price of STRF is above $100, the effective yield is 9.1%. The tax equivalent yield is 14.4%. The duration is 11 years. STRF offers the longest duration yield with the highest seniority and investor protections. Higher yield, more collateral coverage, and longer duration than investment-grade bonds. STRF is interesting because it's the safest, right? It's the crown jewel of the capital structure, and it's the safest place, in my opinion. And I think because of that safety, that's why you see a higher share price. And on top of the yield you're going to get, you're going to see some appreciation in the principal and the price of the instrument as well, because, again, you're paying a premium for being at the top, being the safest of the preferred offerings. Next up, we have STRC, which is Treasury Credit, variable monthly cash dividend designed to promote stable price dynamics. It has an effective yield of 10.4%, and so SCRC is the least volatile. It operates more like a money market fund where the price is going to stay pretty stagnant, or at least that's their goal with this equity. STRC is the best place for really short-term capital because they pay out the dividend monthly. You're not getting the upside of the equity or just the appreciation of the capital in general because they're keeping that price pegged at $100 they will strategically adjust the yield to keep the price pegged at $100 basically. But again, this is a great place if you're storing short-term capital because of that monthly payment. The tax equivalent yield is 16.5%. SCRC offers pure yield for those seeking stability, simplicity, and minimal volatility. I think SCRC is the easiest sell for someone, say they already keep their cash in like a high yield savings account or a money market fund, something like that. I think for someone who doesn't understand all this, capital stuff as much, I think this is the easiest sell because the price is going to stay stable, so they're not going to question why the share price is going up and down, and they're going to just see the yield of 10.4% and think that that's great, right? If you were to ask anyone if they want a 10% yielding savings account, the odds are they would say, yes, that sounds great. So again, here's just a quick illustration of SCRC's tax equivalent yield compared to other debt instruments. That was a brief explanation of these preferred stocks. Let me know your thoughts down below. Which of these instruments do you think is the most compelling? And yeah, that's about it for me. Leave a like and subscribe if you got some value from this. And as always, together let's work, save, and build a better future with Bitcoin. See you in the next video.